Well, hello everyone. K-Kim here from the Traders Club, and welcome to Midweek Update. Tonight, what I'm gonna do, we're gonna look at the equity market indices like we've always done on a bi-weekly basis. I do this steady recorded video every other week, and I do also a live midweek update every other week. So we've done that last week, so tonight we're going to be doing this in a steady recorded video. I promise it's not going to be too long today. But next week, I am planning on doing the live midweek update right after market close. So feel free to sign up for that if you haven't, and you guys can have to come out and just hang out with me, ask me some questions if you like. But I will be next Wednesday, right after market close. I will be analyzing the market and a few names like Apple and Tesla live, and just get you guys to know what I'm thinking on these names here. So, well, tonight we're gonna do, obviously we're gonna look at the S&P 500, Dow Jones, Nasdaq, and Russell, and see where they're at. And I've been writing some articles regarding the Nasdaq and the S&P 500. Last Thursday I wrote one, talking about that, we potentially are gonna have some bounce this week. And then last night I wrote another article looking at this this chart right here, explaining this chart right here. This is S&P 500 weekly chart, and going back all the way to 2003 here, and this was before 2007, 2008, 2009 market crash. And then this is today, 2014. And I want you to pay attention to this chart real quick. And I want to kind of, the most recent article that I wrote like last night, I think. Yes, it was last night. And, titled The Final Push. And obviously, without the proper topping signal, which I've been emphatically, articulating about how important that is. Because this market isn't going to just start rolling over, and I don't understand why everybody start freaking out. I guess that's a human nature. That's the difference with people who are more seasoned traders. They understand certain facts, so then they don't freak out. You know what I mean? Because there are certain things can happen. I mean, anything can happen in this market. And obviously, this is life. Anything can happen to you tonight. But we were talking about probabilities here. So what I'm talking about is without the proper lower highs and lower lows, you know what I mean? There will be some bumps up and down before actually crashing down. Again, this is a weekly term. Even on a daily chart, we do not have a primary term lower high on S&P 500, Dow Jones, and the Nasdaq. We do have lower high and lower low on the Russell, but we do not on the S&P and the Nasdaq and the Dow Jones. And looking at this weekly chart, you can see that we came down, but we are going back up. The biggest question right now at this point is, are we going back up to create a lower high? Or are we going back up to create a new all-time high? And there's another big question after that. When we get up, again, this is a weekly chart, guys. When we get up here, are we going up? Are we getting that one final push to scare everybody out, to make all-time highs and just fake everybody out, and then before crashing down? And again, those are all these hypotheses and all the theories that we do not have any kind of evidences of as of today, right? So when we're doing analysis, when you are doing analysis, and when I am doing it, if you are using technical analysis to forecast this market, it's very important, it's imperative that we look at the current price action, not with the data is not there. I call them ghost data. Not with the ghost data is not there. It's not here. So the data, the tangible data is at hand. Whatever the data is at is here. And that's what you want to do your analysis from. And then, obviously on a daily basis, on a weekly basis, things can change, but as of today, what are we seeing, right? So that's how you're going to do your analysis. And obviously, looking at this here, we had this kind of firm uptrend support right here, and this is level right there, right? And this wasn't fully established, obviously, because we hit it once or twice, and then this was a potential level. But then you can see what really got my attention last week was this long lower wick. What is that? That is what we call weekly hammer. And weekly hammer is rather strong. bullish signal, because you can see last, and obviously all these candlestick analysis, something I've been talking about is that they cannot stand alone. What they need is they need friends to come over and support its cause. If not, if there's no follow through next week or next day, then it can just be nothing, kind of a resting pattern. All candlestick analysis, you have to consider that fact that it has to have a follow through. And it's interesting that, and another thing I want to note, that when you're doing candlestick analysis, three things are very, very important. One thing, the size of the candle. Second, the volume. The third, the location of that candle. Now, obviously, the location of this candle is pretty significant because that was a potential support. Not only that, you can see that 50 EMA on this weekly term, right? That 50 EMA active support there, 50 EMA active support there, and that was a 50 EMA as well. It's interesting to note, back in 2007, and even from all the way from 2003 all the way to 2007 before the market crashed, the 50, 50, again, weekly term, 50, 50, gotten a little below, again, that they are not going to completely exactly respect these moving averages. That's the one thing that people a lot of traders do not understand. Just because it gets slightly below the moving average does not mean that it's a signal to short, right? But it's the vicinity that is important. It's the direction of the, you know what I'm saying, of the moving average that is very, very important here. So obviously that 50 EMA on the weekly term, that was important. We got slightly below that, but it got right back up, and we are respected there. And last time, whether this long lower wick hammer was back in, you can see 2007, August here, right? August 2007, we had that long, long lower wick forming that weekly hammer candle right on this bullish uptrend right there, and right on that weekly 50 moving average, 50 MA, 50 SMA, is all around that area. And it's very similar what's happening today. If this is a potential support, we got that 50 EMA going on right here on the weekly term, and then that has me acting as support. And then in last week, we got a long lower wick right on that level, forming that hammer candle. Very, very similar to what we saw back in 2007. Let me say this, just because we have a very, very similar sentiment does not mean that we're going to have exactly the same way. It's going to play out exactly the same way, where it's going to get up, and then it's going to fake everybody out, and then it's going to come down, it's going to go up, and just make your life so much easier, and you're going to make $10 million, and you're going to retire. That's not going to happen, because this market knows all these things. This market just loves to play with your mind, right? You know what I'm talking about. It loves to play with your mind. So this market already knows something at this point. A lot of, you know what I'm saying? So this is a big question, is this, what's going to happen? Nobody truly knows what's going to happen at this point. Are we going to have a one final push? And then yes, I threw it out there on my last article that, well, is this going to be a one final push? It could be, and could play out a pretty similar way. But what I'm trying to get at is let's deal with it when it gets there, right? So when we get there, we'll know about it. And obviously, if you have your positions on the long side, I would have to say that, hey, once you get to a certain level, I think it's best to maybe start to close them out. Not right now, but if we start to make this move to the upside, not just because we have S&P 500 on this weekly term, this similar price action that we have, not because of that, but we've been talking about how Treasury yield, 10-year Treasury yield has been really rolling over, and then also the 20-year Treasury bond has been really spiking there. We've seen some weakness recently though, but primary uptrend still intact. We're going to talk about it a little bit here. Also, the Russell has really seen some major topping patterns. So we're not perfectly healthy state as far as this market is concerned. We do have, as far as the price action, as far as the primary trend is concerned, as of today, we're still in an uptrend. We do not have a topping, as of today, we still do not have a topping pattern on the S&P 500, on the NASDAQ, and the Russell, and the Dow Jones. Russell we do. So let's check out the daily chart here real quick. And so what happened was on the daily chart, this recent run, this run right here last week that formed hammer there. We had a gap here. You see what this is? This is an island reversal bottom. Gap down, gap up. This made an island. It wasn't true gap because the gaps were filled pretty much during the day, but it had that sentiment of the gap of the of the island reversal with a lot of volume right at that level. And so we had the island reversal there that has been confirmed with another gap up. So we got the gap here potentially be a breakaway gap, and then we got a continuation gap. And these 3-4 days of bullish run, I would have to say that's a very strong jump start. Right? Without those gaps, it almost looked like three white soldiers. We've seen three white soldiers back in 2013 here. This is right here. You see that right there? This was a hammer, and then with a gap up, and got 1, 2, 3 guys. And those are three white soldiers, and look at how long that star lasted, at least October all the way end of January. So you can see that's about that lasted 3 months. And I'm not saying that that's exactly what's gonna happen. That's not about it. This game is not about you calling exactly the duration of the run or the price. That's not what it is all about. And I'm talking about the probabilities with this kind of jump start here. You know what I mean? That's a pretty strong jump. So we might get, something that I found out in my research that after three white soldiers, you're gonna get some slowdown action. Same thing with the three black crows. Three black crows is definitely, obviously three white soldiers in the opposite direction, going downside. Like you will see three black crows, and then you have a short-term jump or pull, or like some kind of bounce, short-term bounce, and then it goes, So something like that happens in any kind of a jump start. Like you can see right here, we had a three white soldiers after this gap. That next day we gapped down, and then it continued higher. You know what I mean? So that this recent decline right on that 50 MA, hey, that could be maybe this thing coming down. We don't know that as of today. That's the thing about it. When you're doing analysis, do not do analysis according to what you don't see, according to the ghost data, but do it analysis as of today. And things can change in the next few days. Yeah, let's say if we start seeing this, then your analysis is going to change. But however, as of today, with this kind of bounce, with the weekly hammer and that uptrend support on the weekly time we just looked at, and then weekly 50 MA, I have to say benefit Dow continues to go to the buyers in the primary term, in the minor term. But in the intermediate term, because we are below 50 MA and below 100 SMA, I would have to say intermediate term, we're kind of a bit of neutral, right? Neutral on S&P 100. But obviously, we're above 10 EMA here, so minor term benefit Dow continues to go to the buyers. Primary term, definitely we're benefit Dow continues to go to the buyer because we're continuing to cultivate and establish higher lows and higher highs, in this prolonged primary uptrend. So what does bear need to do to get this market or crash this market down? Everything in any prolonged trend, it's not going to, it's not going to roll over in one day. It needs to have, bears need to cultivate and form topping signal. And that's something we've been talking about, I don't know, last maybe 2 years, right? So, the question is, if it's going to go up, and then are we going to form a lower high here? We don't know that. We'll talk about it when we get there. So that's what you want to see. What you want to see is at least the primary term lower high and lower low. That's the first sign that you're going to see. That's the first sign of this primary uptrend shifting to the downside. That's the first sign. Lower high and a lower low. And if you truly study, going back in history and looking at the market corrections and market crashes and really truly study those patterns, they're not just going to go straight up and come straight down. A lot of times people do not study historical charts or do not look at a big picture because they're day trading. They're so focused on 30 minutes, 65 minutes that they forget. And obviously if you're day trading, you probably don't really care that much. So But somebody like me, somebody who's more longer term, it's definitely very, very important that we understand this and ascertain where the primary trend is going. So obviously, you know, the biggest question at this point is, even back in 2007 when we had a run up, we came down, it got back up, create that lower high, and then created that lower low. That's it. Though we got back up here, that was another lower, and then the market came and crashed here. Same thing happened here, that lower high, right? Lower high, and then we had that, you know, same thing happen here in this correction, lower high, boom. Same thing happened here, lower high, boom. But what we have is that we don't have a lower high. So at this point here, are we going up to create a lower high? Or are we going to go straight up to make new all-time highs and fake everybody out and then start cultivating some kind of topping pattern there? Or are we going to continue in this trend? Right? Those are the million-dollar question, and nobody truly know. Nobody truly know. We'll know when we get there. So I have to stay in the side of bullish, in the side of, bullish side, and I have to continue to give benefit of the doubt to the buyers, given the fact that we have a weekly, hammer right at this level, and that level has been acting as strong support in the past, and that hammer again, and the week is not over. We have 2 more days, Thursday and Friday, and I'm not sure what that candle is gonna be by the Friday, and I'll know about it on Friday and what candle, what kind of candle it's gonna become. But let's say if today's Friday, that's a 1 day of a good follow through, and obviously that 10-20 weekly 20 acting as resistance that has been acting as support in the past, which is old support becoming a new resistance. I get that, but that force with that long lower here there, it seems like they, it seems like it wants to get back up here, and again, the follow through will be important. And on Friday, if we close with a positive, no positive candle, bullish candle, then I would have to say that there's a good probability next week this thing is going to continue higher. So let me go through these very, very quickly. I already spent 17 minutes just on Spider here. Dow Jones, very, very similar. If you go to weekly, very, very similar. We looked at this over the weekend for the members here, and look at the weekly hammer, right? Weekly hammer right on this uptrend support, very, very similar. The same thing with the NASDAQ, another weekly hammer we've seen right there, right? You see that long lower wick, that's a very strong support as well. It's interesting that 50-week moving average here continue to act as support here all the way through. We got slightly below that, but that rising 50 EMA here continue to act as support on this weekly term on the NASDAQ, on the Dow Jones. You can see, if I can get my chart to respond here, sometimes it does is, and I apologize, and I'll have this chance to drink my tea here. So you can see that weekly hammer here right on this uptrend support and on that 50 EMA again, right? So we got the NASDAQ, the Spider, the Dow Jones all having that weekly bullish or weekly hammer right on that 50 EMA on the weekly term, and then also right on the uptrend support, right? The one market index that does not is not endorsing the current, the current sentiment of this primary trend is the Russell. The trend right here is pretty much ended, and now we have cultivated lower highs already. That is a massive topping pattern. And if you look at the historical pattern here, that's how this market is going to get its correction, a big correction. I get that. Again, like I said in last week's video, the difference is that though, when 2011, when the Russell had this topping pattern here this year in 2011, we also had other indices like Spider, the Dow Jones, and the NASDAQ also forming very similar topping pattern. Same thing with the 2007. When we had this topping pattern form back in 2007 towards 2008, we also had a Spider, Dow Jones, and NASDAQ also forming. But today's a bit different, where we still do not have that topping pattern on a Spider, Dow Jones, and NASDAQ. That's the reason why there's a little bit more hint. It's a different situation today than 2011, 2007. You know what I mean? Because the other indices not confirming each other, they're not condoning each other, they're not endorsing each other. right? There's some discrepancies, and usually they're gonna move in a similar way. And so when you have, that's why we got these four, market indices, so that we can try to ascertain the overall market's health. That's why we got all four of these, and there's some more, but the major ones, so that we can try to ascertain what's really happening here. So I have to say we got, because Spider, Dow Jones, and Nasdaq, they're still without the topping pattern. I would have to continue kind of stay on a bullish side with cautionary signal kind of hanging around with the Russell, where the Russell is at. The biggest question is the Russell going to drag all the other indices down with it, or the Nasdaq or the Spider and the Dow Jones is going to bring the Russell up and thus completely nullifying its topping pattern. Again, we don't know what's going to happen, but at least we know what to expect. That's important, because nobody truly knows. Because everybody want to call things, trying to predict the future, and nobody can truly able to do that on a consistent basis, right? So at this moment, my thought in this market is bullish, and I think bull's gonna keep pushing because we're still in an uptrend on the three indices except the Russell, and because of where the Russell is at, I have to be cautious, and I wanna ride some of my equity positions to the upside here, as long as S&P 500 and Dow Jones and Nasdaq continue to make this move to the upside. But I want to be in a process of start to get rid of them because the Russell, with the Russell where the Russell is at, right? So that's my thought there. Hopefully that can be somewhat helpful to you. Let's look at Treasury bond. Treasury bond on a weekly term, we do have a kind of nasty candle here. You can see that long lower wick. That's a pretty nasty, weekly candle. That's the opposite of hammer, which is a shooting star candle there. If you go to monthly term, we haven't. I mean, the month is not over yet, but we're forming something. We don't know what it is. And after this kind of move, this kind of candle, obviously there's very dangerous candle there. Last time we had something similar. It's not exactly the same. This is back in 2003, but we had that, and you can see that the tankage that came with it. Bearish engulfing came with it. We got a bearish Rami with the hangman candle. We did that. So these candles could be important, but again, these candles cannot stand alone. We really need to see how it's going to play out next week or next month. But as far as the daily chart is concerned, we got this huge shooting star candle there. But as far as what's happening currently, this is a weekly chart actually. It's not completely. What I mean? It's not supporting its cause. If this was a little bit lower right here, that would be much more dangerous. But because we're above this level, I would have to say that there's a potentially we could, bulls can trying to nullify this and trying to grind higher. But we don't. It's a little bit too early to say that's what's going to happen here. But definitely a warning sign to keep in mind. And obviously, this is a level that we've been looking at right here. We've been accumulating heavy positions. One of our core positions was a Treasury bond since late March, and then we completely closed our positions up here when we got to that level. And you can see we're kind of in this rising channel kind of formation, and then we gapped up high, and just shenanigans happened, just people being emotional, and then things got heated, and then just everything was sold off, and then now we're just back inside of this channel there. So definitely this isn't the level that I want to initiate anything. I don't want to short either, because we're in an uptrend. We're still in a primary uptrend, so nobody knows where it's going to bounce. But I would like to see, a lot of people have been asking me, okay, where would you like to go back long? Ideally, I would like to go back long somewhere here. When we come back down here, if there's a good confirmation of a bounce, that's where I like to go long here, potentially for the next level or more higher level there, but the big, and we don't know that though as of today. If the equities, if S&P 500 continues to make its move to the upside, then I think that, I think sooner or later the Treasury bond is probably going to lose it and then just come back down. But the biggest question is though, if this thing actually does come down all the way to 115, 116 level, can you imagine what it's going to look like on a weekly chart? So you're going to be very, very careful here, because if that thing comes down all the way to 115, 116 right here, the weekly term, we're going to have this. And I don't know, and then I have to really pay attention to it and really watch what's happening here, because after a long shooting start and with the follow through on the weekly term, and then what's going to happen if we come down to 116, the monthly chart, what's going to happen is this thing is going to look very, very much, that's 116 right here. That's going to look very, very much bearish, and we're going to look at this candle is going to look like that. And with a monthly long upper wick shooting star candle that long, I mean, that thing is huge, right? This kind of long, shooting star candle, I'm not sure if I really want to go back long. You see that? This is the reason why we have to look at everything. We can't just look at one thing, one section, one time frame, and just argue one direction, right? I always say there's a legitimate arguments on both size. So yes, I mean, just looking at a daily chart, I would love to go back long here, but then we also have to keep in mind what's happening on weekly term with that candle. And so if this thing does come down here, that weekly chart is going to look very ugly. The monthly candle is, so it's not going to be that easy. Nothing is that easy. Not just in trading, everything. I mean, everything in this world, nothing is easy. That's why there's a lot of time is involved to do your homework and to have your research, and a lot of times your experience help, and also your knowledge and technical analysis and being fair with it. Because I mean, we're not fair, right? Whatever we want to do, what happens is we get gravitate towards what we want to do, instead of, you know what I mean? Like if you want to go long, then let's say if we went long, and what you're gonna do, you don't want to look at anything that opposes your position. That's what happens. That's what most people lose money in trading, because they don't want to hear about anything except their direction. So what they do is they don't know exactly what's really happening, and they want to argue with that one fact, but not realizing there's always legitimate arguments on both sides, and you have to accommodate on both sides argument, and you have to come up with decision. So it's not going to be that simple to go back long on TLT if it comes down here. It's not going to be that simple. It's going to, you know what I'm saying? So I want to go back long somewhere here, but I would have to also look at what's happening in a lot of different ways in the weekly term, monthly term, and the price section on daily term, and all of that. All right, so let's see here. So we got Apple and Tesla here. I'll go through them very quickly. 27 minutes gone by. Apple, obviously, it was a little bit of danger signal when we got below that, but we found support in this 100 SMA here. We got right there. You can see that we had kind of a inverted hammer candle there, kind of gap down, gap up, a little bit of island reversal sentiment. It's not a textbook island, but had a sentiment there with a huge gap. And we're back at the highs here. But the thing about it is, though, I'm keep talking about this, is that this is not the level I want to go long. I really do not want to go long here, because I do think that bulls going to continue to struggle. I mean, it'll be, if you're long in here, and if this thing continues higher, great, But you can see it's just the wind. There's this unknown pressure that we're seeing here, and I really just, though we're continue to make higher lows, kind of like here, but then again, there's this kind of unknown, this selling pressure, and most likely because there are a lot of traders and investors at this point think that this is kind of a level that a lot of people are not going to feel comfortable start investing for long term. A lot of times after some kind of a correction or move like something like this, then it will get more attraction to many banks and many hedge funds and things like that. But at this point, a lot of people get in for much shorter term, but it's tough to know that if this thing gonna really fly. Plus, where the market is at today, it's been, with a lot of fear that's going around in a general market with a lot of indications and things like that. You know, there's potentially, is this possible that, you know, Apple could potentially get up, but I just think that it's going to continue to struggle, like it's been struggling here, and you know, I think it's going to continue to struggle as it goes. And I think Bull's going to try though, and just because we're still in an uptrend, that's for sure. But again, with this, I'm not going to go long here at this point. I did written an article. I did write an article on it where I like to go long on this name, and feel free to check it out on my blog there. So as far as the short term is concerned, if we can able to keep this gap open, I think we can potentially grind higher. But in the event that if this thing start coming down, we do have a little bit of a, let's see here, we do have a little bit of a shooting star like candle. It's a bit small, but you know, we do have that. Again, they can't stay on low. But if we start to see something like that tomorrow, and then if this thing gaps down next few days, that could be an island reversal, and that could be a trouble for Apple. Again, I don't know if that's gonna happen, but if you see that happening, right, we get a bearish day, and then we get a gap down, gap up, gap down. That's island reversal, and that's that could be a dangerous signal there for intermediate term. I wonder if we had any kind of an island reversal up here. I'm trying to see. We really didn't have any island reversal up here though. But this was a kind of an island reversal, but nothing really tangible or textbook there. But so this gap must be either sustained, or maybe it's gonna come and fill it, and then go higher. But any significant gap downs is gonna be bad. That's gonna be an island reversal. Just keep that in mind there. Lastly, we'll look at Tesla. We'll end this video. Tesla, obviously, you know, we're primary term. We could still say that we're still in this kind of an uptrend here in the primary term, but intermediate term and the minor term, we're in a downtrend. You can see the lower highs and lower lows. Intermediate or minor term, we're still below 10 EMA, so benefit Dow continues to go to the bears. The 10 EMA is acting as resistance currently, and it really, you know, to me, what it is a biggest warning signal is that let's see here, is that this is what I like to go three peaks bearish divergence here. You can see higher high and lower high, and we're talking about weekly term, and you can see how this thing just started to really come down after that cross here. So, and last time I wrote an article was back up here, I think, when this was starting to form, but since then it progressed a lot. It progressed a lot here. So that's definitely a warning signal. It's not 100% mean that, you know, just because we have that, the Tesla is going to just crashing down. That's not what it means. It just means that it's a warning signal, and it can get very, very hectic here. And another thing about it is we had this kind of uptrend support that is kind of now broken, so we could retest it and then roll over, something like that. But if we lose this level, next level supports are these two levels right here, this level and that level. And so those are level to watch here. But again, in the mind, we're in a downtrend in the intermediate term, right? Lower lows and lower highs. So this is not the level to go long until we see some kind of a bottoming signal or bottoming pattern of some sort, double bottom, some kind of double bottom, triple bottom, or inverted head and shoulders. What it needs is start to cultivate higher lows and higher highs. Until then, it's probably the best to stay away from it, and then look for better signal there. So that's everything for me or today for this video. Again, hope you guys find these videos useful. I try to go as fast as I can, and even then, you know, I have to spend 30 minutes to explain these things, because I just want to tell you, you know, just a lot of times people think that, you know, this is not an easy business, right? It's not easy. It's not for everybody. This is not something just because you read one technical analysis book, or just because you follow somebody on Twitter and stock quiz, and somehow you learn and you figure that it doesn't work that way. You know what I mean? It takes tremendous work, but the work or the skills that alone is not enough. There's a lot of psychological aspect of it, the mindset, the forward. It goes all with it. You have to master this total package that you have to master as far as the technical analysis is concerned. And the reason I say this is because when I go around and I don't do this, but sometimes I go around look at stock tweets and Twitter and just kind of read through what people say. And there are a lot of broken technical analysis people coming out and telling things and about certain things. And I want to make sure that because if you learn something wrong way when you're first starting, then you're going to be stuck with it. And once you're stuck with that, then it's very, very difficult to change your habit down the road. Think about you had a bad habit when you're young. Some of the stuff that you're still doing if you don't want to. It's kind of like that. So it's very, very important that you understand how these things work. So and that's what I try to do with these videos. So I'm sure many of you guys appreciate that. So anyway, next week we're gonna do a live midweek update. I'm planning on doing on this. I have some important meeting that I have to attend. So it'll be next Wednesday right after market close, and so you guys are going to come out, hang out with me there, and you can sign up on my blog, or if you're watching through YouTube, I'll put up a link there as well. So well, you guys have a great night and enjoy your Wednesday night. We've got 2 more days of market open this week, and obviously looking at the spider here on the weekly chart is gonna be important what candle it closes with right here. Let me show you one more time before we go. Like I said, this hammer right there it needs to have a follow through, and if this was a Friday and close with that, that's a pretty good follow through, right? But if we I don't know how it's gonna behave next few days, but if we have a pretty good looking candle there, I have to say that next week it will be probably gonna continue grind higher, and this could continue to grind higher to the upside. But if we start to see maybe like much lower candle, something like this by the Friday, then it could be trouble for the buyers, where this could become some kind of a bear flag for lower or something like that. So again, as of today, looking good. We've got 2 more days. So definitely we'll watch what happens next few days, and then will be important what happens on Friday and what candle how it's gonna the way it's gonna finalize on Friday with the weekly candle. That will be important to forecast what's gonna happen next week. So have a great night. We'll talk.